Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here today with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Ian, welcome again this week.
Yeah, hi Don.
Making money in stressed capital markets situations is tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address $38 trillion in debt, contradictory fiscal and monetary policy, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Luckily, Ian is here with Siberia's latest press release. Ian, markets reverse as Walsh walks back hawkish narrative.
The title is actually It's Transitory, Stupid.
Right, sorry.
My rudest title and you missed it. Yeah, so market is not focused on Iran anymore. That's old news. Hasn't been focused on Ukraine for quite a long time. Razor sharp focus is now the Fed. Kevin Walsh done one meeting, second meeting coming up. He appeared in the ECB's conference last week. Appeared to walk back a few of his more hawkish statements. He said expectations of inflation over the 4 weeks of this period, they've come down. Inflation risks have come down. Backed up by the EU CPI, which was a lot lower than expected. So markets now walking back the rate hikes.
Is that softer language a genuine Fed pivot, or are markets just overreacting?
Well, I think they're, as we said last week, they're trying to keep the Fed or make the Fed more credible because there's some sort of monetary reset coming at some time, and you can't retain the global reserve power when your president is continually kicking your central bank. I mean, it's just not going to happen. So everyone's got to get their ducks in a row if they're going to pull off the greatest escape since Houdini.
You mentioned about markets not listening or not worried about the two wars. And one of the things in your release, you talk about oil has dropped back below its 200-day moving average. Is that, with that moving average below 200 days, is the transitory inflation argument deserve a serious reassessment?
I mean, we'll find out, obviously. Everyone is, panicking because the price of oil has traditionally driven inflation higher, but America is no longer dependent on the price of oil. Well, I suppose it is, but they are self-sufficient in oil. So oil is nowhere near as important as it was in 1970s. So to me, the market is overreacting. This It's Transitory Stupid title is, this was the story that Powell took. The stance he took is that the inflation wasn't transitory when he hiked rates. He took the policy it was transitory when they hiked rates and got it very wrong. Inflation, or a reading of CPI went to 9% or whatever. Anyway, it was a lot higher because they just printed up, 25% of the entire money supply and given it away. So the price of oil, I don't think, really is relevant, apart from the fact that, as Americans call it, gas goes up, immediately, and it's more expensive for everyone. It caught a lot of countries like Australia and England, without much supplies, but it's not as inflationary as printing 25% of your money supply, for sure.
You also make mention in your release about the numbers on the non-farm payroll on Thursday. Do you want to elaborate on that a bit more?
Yeah, so it came in a lot lower than expected. Because it was the holiday for July the 4th on Friday, which was July the 3rd. some people in the markets took that as it was going to be a blockbuster number. So Trump said, release it early and we'll celebrate it on 250th anniversary. Turned out to be completely wrong. And so lower than expected, no inflationary pressures from average hourly earnings. The ADP, which is the private payrolls that was released 2 days earlier, was lower than expected. It shows an economy that is weakening but not at a huge pace yet. So the continual Trump story of that we're going to have the greatest GDP ever, it's still going down. It's 1.2% is the last reading from the Atlanta Fed. So everything is a mirage. And meanwhile, the US economy is only doing well because tech stocks and chip stocks are going up, keeps the stock market going high, keeps people feeling rich, keeps them spending a bit of money.
So with that weakening, is the bigger risk now inflation persistence or a faster growth slowdown?
Well, depends who you talk to, of course, but to me, the inflation is transitory because the price of oil has come down. And even if it stays higher than it was, who does that impact? OPEC's just announced it's going to release more oil. In reality, the world is awash with oil. It's just often in the wrong place at the wrong time. So is the economy slowing? I think it is. The global economy is doing really badly. I think the American economy is slowing, held up by, as we just said, tech stocks and chip stocks and those companies. Yep. And the big news in that sort of arena was that Meta has built so much compute power, actually people can buy that off them. So rather than this big rush to secure compute memory, all this stuff, we don't have enough of it. Seems that there's too much of it because Meta is selling it back to the market. So does that mean a slowdown in AI? Don't know. Does it mean overinvestment? Probably. Does it mean that Meta is becoming AWS? Who knows?
You, in that same paragraph, you mentioned about capital flowing out of safe havens, chip and tech stocks, and back into risk assets.
Yeah, as Walsh appeared at the ECB forum, massive amount of gold buying, silver buying. It's at its low for the last 2 years or a year and a half. So, if you've had the run on Meta, AW, any chip stocks, Nvidia, and whatever, and you see that rates now might be going down and certainly not going up, then maybe gold at a lower price is a good switch. When the Iran thing started, lots of money went out of gold, the traditional safe haven, into the new safe haven, which is chip stocks. And as Iran becomes irrelevant again, for the moment anyway, it's coming back again.
So is this the start of a healthier market or another liquidity-driven rally?
I think the liquidity currently is very low, and any rally at the moment is off a very low level, so nothing untoward. I think that markets are really waiting for the next signal. So we can't really expect a rate cut from America. So what are we waiting for? We're waiting for something. So markets are doing what they normally do in summertime, which is go to sleep.
Anything else out of your release that you wanted to highlight?
No, I think that's it really. I mean, as we go through the charts, you'll see that there isn't that much to talk about at the moment. Typically in July and August, lots of traders are away from their desks in the US and the UK. So we could have a period of relative quiet. All other things, assumed.
Yep. Okay. Well, on that note, let's look at your charts then.
Okay, so let's start the other way around this time. Stock markets. Well, this is the S&P daily, and you can see it's from the wedge shape. It's waiting for something to happen, and that thing may well happen in the next week, because then the wedge will break. The Dow Jones keeps going up, interestingly. It had a very good day on Thursday. Where is the Nasdaq? There's the Nasdaq. So the Nasdaq, it's not really doing anything currently. So those markets are kind of on hold, or interestingly, the money has gone out of tech stocks and into the traditional things on the Dow Jones as well. Rates, 10-year rates in the US. This is when Trump got into power, or inauguration day actually. So we are, same rates when he got in. That's not good enough. He was going to drive rates a lot lower. The dollar is a little bit lower. I'll show you in a minute. So the Aussie currently is sitting on, let me just expand this, is sitting on support, which coincides with the 200 moving day average. So lots of good support here. It's gone down to current price, 68, 69, high 68s. If you think the dollar's going lower, this is the one to buy, because it's sitting on support. The dollar, after its big run up, has kind of hit resistance. So we're really waiting for something else to happen there. Gold's long downtrend has had a bounce here at a 30% discount to the high of 5,600. So we've had, 3 or 4 days of rally, but we've got to make some serious headway. So currently at 4,150, that price has got to get up to the 200-day moving average around 4,500 to really get any momentum. And really, to get much higher, it's got to break this downtrend channel, which currently is at 4,690. So it's got a lot of work to do to look any better currently. Silver managed to save itself. There's lots of lines on there, but we'll get rid of that one. So silver managed to save itself, but really, like gold, it isn't performing that well. Bitcoin had a bounce. Everyone thinks it's the lows in, but it's the same again. It's big down move. Yes, we've had a bounce. Yes, it's a better setup than gold in that we've kind of got many bottoms here, and I just think it's going to go sideways. We've been buying Ethereum this week, and that's looking better. So this was long-term trend support. Well, it's great with these cryptos because you can say it's a lifetime support because it only goes back 10 years. So you can see that, if we really drop below this level, you could say it might be going to zero, but it seems to have saved itself for the moment. So we're suggesting that it's not going to die because it's the token that's powering the real world asset tokenization. So we can't let it go to zero. But it's still pretty lackluster. And that really is where we are, in that markets have had all sorts of things happening this year.
Yep.
And now it's a chance to do nothing for a bit.
Anything else coming up this week?
There isn't that much. There's some bond auctions in the States as usual. The minutes of the last FOMC will be coming out, so everyone will be looking at that. That's on Thursday. Otherwise, not a lot, to be honest.
Pretty quiet, as you said, pretty quiet, and the charts also seem to reflect that as well, as you're saying.
Yeah, so we're just waiting for, another black swan, or maybe some good news, who knows, or a gold revaluation, or whatever it is. But until we get some news, I think it's going to be sideways, to be honest.
For a while. Yep. Okay. Very good. If that's it, that's another app then of this week's Limit Up podcast. Thanks again, Ian. This and previous podcasts can be located on the Siberia Capital website. Alternatively, you can subscribe by accessing the link at www.siberia.capital/contact. Thank you again, Ian, and thanks everyone for listening in.